February 18th, live trading, San Diego. We got the Lowe's Coronado. I mean, what else would you want? This event is limited to 50 people. Look at your calendar, clear it, make sure you show up. If you want to be a rebel, this is the place to be. You got to sign up for it now.
Guys.
Giddy up, baby.
Welcome back, folks. I am John Najarian, and this is The Rebel's Edge. And Mark Lopresti, many of you who have been watching the show for months now have recognized Mark and appreciated his insights. We certainly thank you, Mark, for joining us again today. And we're really looking forward to the entire show, not just the Macro Minute, but the Macro Minute does play into one of Mark's strong suits, folks, because he's a guy that actually invests in places like the Permian and has put deals together for various energy companies there. So the Macro Minute today is going to be, in my mind anyway, energy. The fact that it's $20 for a BTU in the Boston area in the Northeast, and meanwhile in Appalachia it's only $5. The reason for that is they've got pipelines and they don't have pipelines up into the Northeast. So it's as simple as that. That's going to come back. And unfortunately, that's one of the negatives, I think, out there, Mark.
Yeah, I do agree, John. And a quick, very happy holidays, belated Merry Christmas, Happy Hanukkah to the incredible Rebel Nation. It is always a pleasure to have the opportunity to come on with John or Pete, today with John, and bring some actionable insights that you can use. Since I don't think I'm going to see the Rebel Nation before New Year's Eve, I want to wish everybody a very happy New Year's Eve and look forward to seeing you in 2023. But yeah, John, I think energy is lining up to be another macro investment strategy that should benefit savvy investors in 2023. And the one point I'll make on that is we started a couple of weeks ago, in fact, to see some of the smart money, the big hedge funds, start to stop selling large energy names and energy commodities and start getting positioned to buy. So we're expecting that oil, gas, things in that space, we're pretty bullish on that sector going into 2023, once again.
Yep, I don't disagree. Well, let's take a look, Mark, at what was in the pre-market and in the first hour one of the hot sectors today, which was semiconductor chips. Oversupply of chips, well, that was pressuring them, and they looked like they were going to maybe snap back. But with the market sort of rolling over in the last hour and a half, it looks like they're not going to be bouncing back.
Yeah, listen, there's no doubt this is a complicated story, and it's a complete 180-degree reversal from the pandemic supply shortage in the chip sector that we became so familiar with, where a lot of today's price action being propelled in part, I think, John, by the article that came out in the Wall Street Journal. And look, the short version is that the chip manufacturers, by and large, simply got ahead of their skis, manufactured more to try to make up for that supply-demand imbalance, that shortage on the supply side, going into a recession, inflationary environment, consumer demand for discretionary things, coming down. Biden's export restrictions on chips not helping matters for companies like Micron that actually are part of that chip manufacturing supply chain. So limiting what they can sell into China, which is going to impact their earnings. And look, we saw some canaries in this coal mine, Micron announcing just a couple days before Christmas, I think, John, a layoff of almost 10% of their overall workforce. That's got to tell you something in terms of what the C-suite's thinking 2023 has in store. And we are expecting to see continued pressure on the chip sector, certainly through the second quarter of 2022.
Yeah, well, that will perhaps create some opportunities, but right now I think we're both probably laying back, waiting, although we've traded some short-term NVIDIA calls in the past week or two. They were very short-term. They weren't long-term. How about this one? Apple. This one began the year, Mark, at $172 a year. As we're closing the year out, it's not even holding 130. I mean, it was trading down into the 125, 126 area. Still my largest holding, so that does hurt. But man, to see a 25, 26% drop in one of the largest companies on earth, when you look at the NASDAQ down, that's all you got to look at today.
Yeah, there's no question. And I think Apple probably, another tax loss harvesting candidate. So, some of the action in that stock is undoubtedly driven with what happens at this time of the year with just 3 short days left to go. Look, we already saw the stock getting pressured from some supply chain issues in their Zhuandong, and I'm sure I'm messing that up pronunciation-wise, facility.
Better than me.
Shenzhou. I just remembered it. I'm pretty sure some of the COVID lockdown issues in China. Investors looking to see how the company's much anticipated AR/VR product launch goes this year, although there's a lot of uncertainty on that because AR headset sales, as I'm sure a lot of our viewers know, have not benefited companies like Apple. But look, analysts by and large starting to think this thing looks cheap. So I don't know that I'm jumping in right now. In fact, I'm not. I'm going to wait and see how this thing trades in the first week or two of the year, but it is definitely starting to look like a price where we should consider either adding to a position.
I'll tell you what, Mark, somebody bought a lot of puts in Apple this morning. So I had to buy some protection today too. I am not going short the stock, but I am buying some put protection. There were 22,000 of the puts bought in Apple today. That's not a good sign.
No.
Granted, these expire in a week, but my gosh, that's a lot of puts. That's 2.2 million share equivalent. I don't have 2.2 million shares to protect, but wow, that one was a surprise today. Then we've got this one, Mark, KALA, normal activity, 212,000 shares, 12 million in the first 20 minutes today. Why? Well, they're a clinical stage biopharma, and they've got some good news about an investigational new drug application, an IND as it's known. And wow, is that driving this stock? It was up 100%. Now it's up 220% on the session, Mark.
Well, listen, this is an indication of what can happen and what makes these types of stocks, these clinical stage biotech stocks, so tempting, right? But that which biotech gives, biotech taketh away. And just as quickly, those kinds of names and situations like this, when the FDA announces that a trial has failed or stalled for one reason or another. So I really caution folks to understand, if you're considering investing in these types of names, understand what you're getting into. This is largely speculation. Kala is no exception to that, John. This announcement today was the approval of their phase 2 trial for this drug, for this rare drug. It affects less than 100,000 people in the United States for this very rare disease, and that is technically considered a rare disease by FDA standards, that can cause significant vision impairment or blindness. So certainly good news for folks that suffer from this terrible disease, but I am not subjecting myself to FOMO and trying to catch this frickin' thing. I am always very wary about these clinical stage biotech names. They can pay off, but they can just as easily, see the other side of that coin. So tread cautiously.
Absolutely. And remember, folks, whenever Mark, Pete, or I talk about micro cap stocks, I mean, this one was, 10 million before today. Now it's 24 million and running higher as far as market capitalization. They can move very, very quickly. That's why it's fun to trade them, but you need to be aware that this is not the same at all as some of the S&P 500 or even Russell 2000 stocks. This is way below that. All right. What about Generac, Mark? On a day when the markets are looking pretty dismal after that failed rally this morning, Generac still holding on to nearly a 5% gain on the strength of a Janie Montgomery Scott upgrade after just a horrible 2022. It was down 74%. prior to today, Mark.
Yeah, I think Generac has the dubious distinction, John, of being the worst performer in the S&P family for 2022. Man, there's a trophy that I don't want in my background on Zoom calls. Interesting. It's an old company. It's been around since 1959, 1960, focused on a sort of traditional power supply, a lot of home power supply. So think about, generator backup if your power goes out, as it often does where you are right now, John, I think down in Puerto Rico.
Yep.
Interesting call from Janney Montgomery Scott today on this upgrade less than a week after Baird downgraded the stock to neutral. So the analysts are a little bit all over the road on this thing, and I can understand why. A lot, I think, of Janney's upgrade is premised on this notion that this may be a cheap option on renewable. I think Generac still has a lot to prove in terms of its relevance as a real player and an innovator in renewable energy space. And I'm concerned, John, this is where my concern really comes in, that in an inflationary environment, we always have to think about what's pressuring and influencing consumer behavior. Are consumers going to be compelled, unless they really have to go and upgrade to the new Generac 5000 home battery backup? And a durable good, big spend like that in this type of an inflationary environment does tend to suffer unless it's an essential. So I'm real dubious on this one. I'm not backing Janney up on this upgrade, John.
Yeah, nor am I, Mark. I think people will be, a lot of us probably, if not hoarding cash in early 2023, will be holding off to see if prices come down on some of these items that maybe you need it, maybe you don't. A lot of people really get jazzed up about this one in particular going into the fall when they have disruptions from hurricanes and things like that, although it's, of course, not just for hurricane disruption. All right, let's get into a little bit of the smart money for the day, Mark. I've got an interesting trade going on in the February 10 puts for Ford, and 8,500 of them were bought. Ford was trading at $11.15 or something like that, traded down into the $10.90 range, bounced back up over 11. I think this is somebody big who's trying to build a long position in the stock and is trying to set a floor under where they're buying it, so that they don't get, surprised if it's a really bad first quarter of next year. So it's not that I'm betting on the downside. I think this looks more than anything, Mark, like a protective put that somebody has purchased. But, given that the market's weak, I think people that are buying puts are pretty smart.
Yeah, John, I don't disagree. At first glance, and I looked at this one, this looked like a hedge to me. Otherwise, a very, very bearish call on Ford, and I'm just not there in terms of being that bearish. I think it's a hedge.
Yep. Well, what do you got for unusual activity?
Well, to your bull, John, I have the proverbial bear. We've got bullish call buying in Lucid Motors. Almost 11,000 of the December $37 calls bought for almost up to 10 cents above open interest, about a 5,500 lot. The stock, as we were going live, almost at $6.60. This against the backdrop of Lucid being down 30% just in the last month and 80% over the course of 2022. The company, of course, having recently completed a very large $1.5 billion equity offering to, quote unquote, shore up its balance sheet. This against a disturbing trend of customers canceling orders, some 3,000 by some accounts, customers canceling orders for these new Lucid Motors motor cars, of course, also against the backdrop of the company basically indicating that they do not expect to meet production goals. So interesting trade. If you made money, take profit. I am not bullish on this stock going into 2023.
Yeah, it's not just Tesla, folks, that is being hammered. And that might be because of Elon Musk, as well as, the fact that some of the parts are a lot more expensive. And we've even seen Elon cutting some prices on some of his models to move them. It's certainly not good in the EV space right now. No. The only good thing I could say possibly is this is a short-term trade. These were puts that expire this Friday. So they weren't looking long-term bearish, but I'm with Mark. I am not a big buyer of Lucid right here. Not right now. But I'll tell you what I am a big buyer of, Mark. Dallas Mavericks, Luka Doncic. One of the greatest performances in NBA history. The guy scored 60 points, 21 rebounds, 10 assists. Now that's a triple-double, but nobody has put up 20 rebounds plus, and he did 21 as far as part of their triple-double. Wilt Chamberlain didn't even do it, Mark. What did you think of this performance?
I was just going to ask you, because I'm not as on top of these stats as you or Pete are, as our viewers unfortunately know, but it sounded to me like he's starting to brush up against some of the records set by some of the GOATs, greatest of all times, like Wilt Chamberlain. So did he actually break Wilt's rebound record with that last game performance, John?
Well, I believe he has now the highest rebounds for a triple-double, as they like to call it. In other words, because he scored 60, 21 rebounds, 10 assists. We all know Wilt Chamberlain put up over 100 points on his biggest night. But on that night, he tallied 20 rebounds when in a game. Let me see. What was that? Let's see. Wilt scored in a game. He tallied 20 rebounds. The only time that he did tally 20, he only had 53 points. So Luka put up 60 points, even better than the great Wilt Chamberlain. Now, that's not to disparage Wilt. It's just to point out how great a performance this was by Dallas Mavericks star. And I'm sure Mark Cuban, is smiling still today. Probably can't wipe off that overtime victory smile.
Probably a fair guess.
Now, as far as these two games, you tell me what you're more excited about, Mark. We've got the Holiday Bowl, number 14 Oregon against number 25 North Carolina. Two very interesting teams with a lot of great players. That one's on Fox at 8 p.m. tonight. Or do you rather the Liberty Bowl with Kansas versus Arkansas on ESPN at 5:30? So you can see them both. But if you only had to pick one, which one would you watch?
Well, I want to say I'm starting to call into question my agreement with what Pete said when I was on with him just last week, that there are not too many bowl games. I'm starting to think, even though I agreed with him then, I might be changing my opinion. But on this one, look, I got to think the Oregon game is lining up to be more interesting viewing entertainment. Oregon is obviously, for those following this, shooting for their second straight 10-game win season, and the third in 4 years when they take on North Carolina. So very, very interesting lineup. I got my money in Oregon, and that is the game that I'm going to be watching.
I'm right with you. I like Arkansas, and my accountant down here in Puerto Rico, Mark, is a big Arkansas fan. So I had to throw that out there. But I do like the way they play. I do like the way Kansas plays. But I think you're going to see a more wide open game between Oregon and North Carolina. Two great quarterbacks lining up against each other. That's why I like that one better. Yeah. All right. Well, it's time for the Venture Minute. Today, Mark, we're going to be talking about a company that's got outrageously cool tech. And it's not something we talk about when we talk about private jet aviation, is it?
No, it's not. And what's interesting about this one is it is as much a tech company as it is a private jet company. We're talking, of course, as John said, about Vera Jet. This is a company that offers jet card memberships exclusively utilizing the Cirrus SF-50 Vision jet aircraft. This is an aircraft, it's a 6-passenger, including the pilot, so really 5, that has very famously a parachute system that for the plane, not for the passengers, for the plane, that when deployed, and I think the success rate is 100% when this safety feature has been deployed, enables the plane to actually safely land using this parachute system. So what's interesting about this company, John, they're covering a orphaned regional market. So this plane has about an 1,800 nautical mile range. So for your regional flights that are either underserved or completely eliminated by the major carriers. This offers a relatively cost-effective option. This plane's also incredibly fuel efficient, with one of the lowest, actually the lowest cost per hour in its class. So very, very interesting company. They also have a very strong ESG program with carbon offsets. So doing everything that they can to reduce the amount of the carbon footprint that's occasioned by air travel. This one is not a client of Moneta Advisory Partners, so no disclaimer to share. It's one that we've been getting to know for a number of months now. We hope to either invest or to come to some arrangement with this, but we like it so much we had to share it with the Rebel Nation today. And John, you had the chance to fly the SF-50 with the CEO of the company just a few weeks ago in Deer Valley. What was that like?
Yeah, it was crazy fun. This is a great jet, folks. It holds, like Mark said, 6, including the pilot, or you could configure it if you buy it. You could configure it differently, but that's the way normally it would be delivered. And, you know, it's about a $3 million aircraft. It's got a ton of artificial intelligence built into it, which is why I was able to fly it with, of course, Richard, the CEO, sitting in the left seat. I was over in the right seat. But just with the joystick over here on the side, Mark, we rolled down the runway, took off, went right through a mountain pass, and then shot up to 13,000 feet to get above the clouds. It was a wild ride, but not a bumpy one, because that artificial intelligence, that AI I was talking about, actually smoothed it out, even though we had 35-knot crosswinds going through that canyon that was shaped like that. We went right through the middle of it. You couldn't even have seen a ripple on a cup of coffee if I was holding one going through there. It's a fabulous jet, and there's no membership fee. Right. You can buy various jet cards. We're not selling it, folks. We're just telling you that there is no fee. Like a lot of these private jet cards and so forth, first you have to join and then you have to renew every year. This is just you straight out buy hours, and if you invest with them, you get the hours for even cheaper. So I'm a big fan of Vera Jet and of Richard. I think he's done some fabulous things, Mark. I'm sure we'll have him back maybe on a Rebels Edge Extra in 2023.
Or a Disruptors episode. You know, you got to think, John, with everything that happened in the past few days with the absolute, you know what show of holiday travel, Southwest Airlines coming apart at the seams, people that fly regionally needing other options, you got to think that companies like Vera Jet have a chance to do really well in 2023.
Absolutely. And Mark, I really appreciate you joining us again. I know Rebel Nation appreciates your insights. Remember, folks, Monday, Tuesday, Wednesday, and Thursday, we're here for you. So we'll be back tomorrow, 1 p.m. Eastern time. Have a great one, everybody. We'll see you at 1 tomorrow.